Hey, what's going on, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is gonna be your mortgage rate update. We're getting hammered right now. This sucks. This is terrible. Listen, I know I do these videos, okay? In hindsight, all I do these videos for is to go ahead and promote business, right? And I'm gonna go ahead and do the shameless plug anyway. I'm gonna go ahead and advertise. But listen to me, okay? Very, very, very closely. As a mortgage broker, as a person who's been doing this for over 20 years, I am begging you, I am asking you, please do not buy a home right now. And I'm gonna go ahead and tell you, if you bought a home just in the last 3 months using an FHA loan, using a conventional loan, whatever you are currently, as of right now, within a 3-month span, upside down on your house. Just so you know, as a national average on price and cost, you are upside down. We are getting brutalized here on the mortgaging side. On the lending side, we're getting completely annihilated when it comes to mortgage rates, okay? I don't know why people like have these happy-go-lucky, attitudes when they're doing these videos. Do you people really like to listen to somebody who's just happy-go-lucky and not just say things the way that they are? Am I like the wrong attitude for YouTube and a real estate market as general? Is my persona like really, really bad? Let me know in the comments below. I am gonna do the shameless plug. I'm gonna go ahead and do that, but I'm gonna actually give you numbers exactly where we were 1 year ago, where we were 3 months ago, and where we are today. The percentages of how much you are upside down, how much you have lost so far, how much we are currently down as far as sales year to date. And then also, another thing I don't understand is like Michael Burry, okay? If a majority of you guys don't know who Michael Burry is the guy who anticipated the whole entire debacle we had back in 2008 with the housing bubble, right? Now the housing bubble, he didn't really correlate anything with the housing bubble. He enunciated something when it came to the employment bubble. And there was a tweet that he just put out this morning at 6:33 a.m., September 26, 2022. So he put something up this morning, but I am gonna go ahead and do the mortgage rate update. We are up about 0.3%. So it's about 30 basis points all across the board. And if you don't know what a basis point is, just so you know, where's this? A basis point, whenever you see basis points or anybody ever talking about basis points is just a decimal, right? It's just a decimal point. Take the decimal point, put it over 2 spots, and that will be associated with a percentage rate. So if you hear somebody say, oh, we're going up 75 basis points, which you've heard a lot, a Fed fund rate is up 75 basis points, Fed fund rate is up 75 basis points. 75 basis points just means 0.75%. That's all it means. But let's get on with this mortgage rate update because we are just getting completely... This sucks. Everything is up in the 6s. Everything is just up in the 6s. As far as APR goes, we're still on rate. We're a little bit low on a couple of things. On the 15-year, we're lower than the national average, which I will go ahead. I can't really go to each individual lending company and show you exactly what we are, but what I'll do is on this website that's called Mortgage News Daily, I will go ahead and put my rates up against what the national average rates are. The national average rates are so much more higher, but 30-year fixed will be sitting at 6.19%. 15-year fixed will be sitting at 5.37%. 30-year high balance will be sitting at 6.31%. DSCR loan, which will be sitting at 8.50%. DSCR loan is a debt service covered ratio loan. That just means that you're using the total rental income that you have coming in to go ahead and cover the debt that you're going out, which is your principal, interest, tax, insurance, and other running costs. Bank statement loan, that's going to be sitting at 8.50%. This is another one of those non-qualified, non-agency programs. This is going to be a program where you go ahead and get qualified as far as income goes purely on your bank statement. So if you, whatever job you're doing, whatever it is that your little heart desires that you're bringing money into, well, that's going to be the one that's going to qualify you, whether you're selling something or however it is that you do not claim or file or do any of that stuff. Well, you're paying a pretty premium, but we're getting so high up there that it doesn't even matter. FHA 30-year fix will be sitting at 5.78%. 7/6 adjustable rate mortgage, which just means that it says interest only for 7 years, then adjusts every 6 months after that. Is going to be sitting at 6.38%. USDA 30-year fix will be sitting at 5.88%. VA 30-year fix will be sitting at 5.81%. Hard money fix and flip will be sitting at 9.75%. And that's going to be your mortgage rate update. Now, the bad thing about all of this is the rates increasing so much. This is going to cripple a lot more mortgage companies than it already has, because in the mortgage broker world, on our world, we have something that's called an EPO, which is called an early payoff. If we refinance, like let's say for instance you're the consumer, right? We go ahead and refinance you, we do a purchase agreement, we do whatever it is that you want to go ahead and do, right? And we are at, let's say today's rate at 6.38%. Let's say 1 year from today, less than 1 year from today, if we go ahead and refinance you again, I apologize, not us specifically, if somebody else goes ahead and refinances you, the amount that we made on that loan initially, we get what's called an EPO fine, an EPO fee or whatever it is that you want to go ahead and call it. We call it a fine because we get fined for this. We have to pay back the wholesaler that we sold to because we didn't meet that 1 year threshold. And a lot of big companies are going to take a big hit on this EPO fee. But whatever. Before I get onto the existing home prices and all of that, Michael Burry. So Michael Burry, he went ahead and tweeted something. He said, "White collar employment bubble is bursting right before our eyes. And the longer it takes the redundancy to disappear, the more permanent the decline in employment will be. Work from home will in time be seen as a culprit." Now, Michael Burry is saying that, okay, so the employment bubble right now is going to be correlated with everybody working from home because in the world of business, okay, we need stuff to go ahead and write off. Now, if we start losing a big chunk of our total write-offs at the end of the year, which this new tax thing that Biden went ahead and associated, a lot of big companies are going to be taking a hit on that, but that's for another video. But as far as total leases and people coming into the office and all of that, we lose a lot of those tax write-offs at the end of the year as far as business write-offs go. Now, the work from home thing, it's also had people staggered from one area to another area, because if you're working from home, right? If you're working from home, well, now the world's your oyster. You don't have to be subjected to sitting here, like let's say for instance, I'm in LA, in California. The cost of living in California is so much different, like let's say for instance in Montana or one of the Dakotas or wherever it is, right? Detroit, Michigan, wherever you decide that you want to go. Shit, you could even go to Hawaii. You know, for a while Hawaii was paying people to go ahead and move there. So that's going to be a kind of, they're saying that's going to be kind of a detriment because the housing economy in this area, you don't need to be here. You could go wherever you want, especially highly tech companies, right? Tech companies that dominate, let's say like the Bay Area or, you know, some parts of the San Francisco or the Los Angeles area or wherever tech is really, really high, which seems to be the case everywhere. But he says that it's going to take a big hit and that's going to be the basis off of it. But now, I'm not going to give you my own numbers, okay? Because if I give you my own numbers, then that's subjective to what I say, right? This is my numbers, this is what I say, this is what I do. No. So what I did is I went ahead and went to the National Association of Realtors. Now, this is a big-ass company. This is a huge, massive, massive company that goes ahead and populates numbers. Now, we go through majority of the same data analytics companies. We go through Adam or whatever company that you went ahead and used as a data analytics company. Now, the first part of this, okay, this is one of the reasons why home prices are going to start decreasing, okay? Number one, the biggest problem we had in the past 2 years during this god dang pandemic thing, you know, Jerome Powell is really dropping the ball on this, like, Fed fund rate. He's really, really screwing things up. It's blowing my mind how people, like, do you ever look back at yourself and think to, like, be like, how did this person become in the position that they are? Like, I've gone and seen a lot of, like, high-level executives, and I'm like, how in the, who in their right mind thought it was a good idea to put you into that position? It blows my mind. But as far as existing home sales, because this is going to be one of the little caveats, right? This is one of the pieces of the puzzle that kind of inflated real estate so much. We have, on an average, we have dropped about 19% total in year to sales in single family home sales last year till this year, which will go ahead and increase the total month of supply, which increases the total inventory, which has been up a total of 28%. Especially here in the West, okay? Here in the West, on the western side of the United States, we're up 27%, or we're down 27% as far as home sales. So as inventory is increasing, purchases decreasing. That's the real estate market blowing up right there. That's what's happening. Now, to give you another idea of exactly where we're at, because I've been through the 2008 crash. I've been a mortgage broker. I've been a real estate broker. I've been in this business for such a long time. If home prices starts decreasing, that means that you are going to be upside down in your on your mortgage. That means that you owe more than the current home is worth, and people are already in there. Now, I'm not gonna go ahead and say, these are my numbers, this is my opinion, this is you know what, screw my opinion, who cares about my opinion? I'm gonna go ahead and let you know. Oh, by the way, I forgot to do the shameless plug. For up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, link in the description below, because if you're gonna buy, at least put me on the lender list. Let me go ahead and try to compete with somebody that you got going on. Whatever. Shameless plug out of the way. 50% commission rebate, 0% listing on selling your home, mortgaging, link in the description below, blah. So, back in 2001, year to date, okay? 2021, year to date, the US mean price was about $462,400. Today, it is $504,400, which is that's a pretty big kicker right there. That is about a 6.38% increase. So why is it important to know why a 6.38 increase is very, very crucial? Now, I actually did it from 2021 in August until today. That's 472 to 200 to 504,400, because a big loan program that a lot of people use is something that's called FHA. Another big one is a conventional, which you only have to do 3.5% down. Now, do you see where I'm getting at? If you, let's say, and I did the numbers just based off of the last 3 months. So let's go ahead and look at June, okay? In June, home prices were at $534,600. Now, if you take 3% down, right? 3% down, that puts you at $16,028. Now that's excluding your other running costs that you have, not running costs, but your initial costs, your title, your escrow, the inspection fees that you have, appraisal fees that you might have. Aside from those, just down payment alone, you went from $534,600 purchase price to a loan amount of $518,572. Now, the difference between that and what we're currently in and what you're upside down on right now is going to be $14,172. So you are currently upside down on your house. You bought the house more than what it actually is currently worth. Now, this is across the board. Now, the thing is that we have hit a 6.38% total from last year until this year, year to date. Well, as of August, I'm sorry, not year to date. From August to August, right? And it's actually gotten even worse now because, I mean, look at these goddamn, these stupid interest rates. These interest rates are crazy. These are the highest interest rates have been since the 2008 crash. And then when the 2008 crash happened, then interest rates went ahead and dwindled down. But just in the whole entire, from just June until now, that's a 5.649% decrease. You're already low. You're already down. We're already upside down. Everybody is. So if work from home, if Michael Burry is right? If Michael Burry is right, work from home is going to be a detriment. That's going to cause a bubble. Employment bubbles hit. The total of credit that you're going to go ahead and use to purchase, that's all in the shitter. Housing is taking a dump. We've lost about 5.6 something percent just in the last 3 months, which majority of people use these low down payment programs. Everybody's not 20% unless you're these big hedge funds that are just dumping money into, which we do sell to, but they're going to take a hurting. Now, if we do an average year to date, and then we go ahead and trickle that in for the next 6 to 8 months, that means in the next even the last 3 months, if we're down 5.649%, what's going to happen in, let's say, another 3-4 months? If we hit a 20% threshold, that means everybody across the board that has purchased a house in the last couple of years, you're all upside down. Every single one of you upside down. Well, that's going to be a mortgage rate update. I don't understand. For 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, link in the description below. That's going to be your mortgage rate update. I'm going to go and kill myself now. Not really. That's just a figure of speech. This really sucks. I don't even understand what to do with any of this anymore. This is going to be so bad. It's going to cripple lending companies. This is going to cripple the housing market. This is going to cripple everything as a whole. Numbers are numbers. Numbers don't give a damn about feelings, don't care about your economic status, don't care about your job, it doesn't care about anything. If numbers start decreasing, people start hurting. And when people start hurting, it's just gonna be terrible for everybody. Until next video, guys, I really appreciate you watching. Like, subscribe, comment. I'll keep you up to date on all this jazz, all this good stuff. Peace. You wanna see what 3.2
I don't wanna waste a minute.